Welcome back. Well, the markets are more or less flattish, but let's focus on another company, Indigo Paints. They posted a rather good set of numbers in the second quarter. The revenue jumped up by close to around 24%. The gross margins as well remained flat at around 41%. Well, to discuss the past quarter's performance and what's the way ahead, we're joined by Mr. Hemant Jalan, the CMD at the company. Hi, Mr. Jalan. Morning. Thanks so much for joining in. Well, you've grown well. On the top line, did you gain any kind of market share this quarter? If yes, tell us how much.
See, I'm sure we have, at least for the companies for which the quarterly results have come out. If the top line growth as a percentage is higher than others, then definitely we would have gained some market share. So the product profile or the product mix across all companies is pretty much similar. So I think we are seeing a breakout in our growth rate versus the other paint companies. We had predicted that at the end of the last quarter, that we said that we are now focusing on marketing in the larger cities, and that will slowly start producing results. The first semblance of that result is visible in our top line growth this quarter. We are hopeful that the disparity between the growth of the industry on top line and our growth rate, that difference will widen as we go forward. And that is the ultimate objective of the company.
Okay, can you tell us a little bit about raw material costs? How much have the RM prices reduced by, and what kind of margin expansion can we see going forward?
So there are 2 or 3 things that happen as far as margin expansion is concerned. Q2 is always the worst quarter for any paint company in terms of margins because the product mix deteriorates. In Q2, which is completely a monsoon quarter, July, August, and September, exterior paints don't sell very much, which are the slightly more profitable kinds of paints. So if you will notice, for all companies, the gross margin is usually the worst in Q2. It rises in Q3, and it is normally the highest in Q4. So we do expect that our gross margins will go up as we move forward. As far as the earlier question about raw material prices are concerned, raw material prices for several ingredients in water-based paints are beginning to soften. They have softened during the course of this quarter. We see signs that they will continue to soften as we go ahead. But raw material prices for solvent-based products are not softening as yet because, crude oil prices remain high. But of course, for us, the higher input is the water-based raw materials. And there we are seeing some softening. So I don't think that there is a likelihood of any price decrease happening at this stage because prices have not come down to that level. But definitely there is more aggression on the ground as far as passing trade discounts and schemes to the primary channel is concerned. So that is happening for all companies and also with us. And I expect that aggressiveness in trade discounts to continue in Q3.
Mr. Jalan, in your presentation, you say that you plan to, and I quote the presentation, grow aggressively and expect sharper improvement in profitability. Could you quantify both those things?
See, I can't give you value guidance in terms of what the growth percentage would be. The objective is that the gap between the industry top line growth and our top line growth just now is visible at the level of 4 or 5 percentage points. That gap should widen as we go forward. That is our attempt. How the aggression will play out, as we have said in the last 2 quarters, that we are focusing on growing in the larger cities where we were underserved. Our primary strategy for the previous 20 years was to grow in the smaller towns. We are now aggressively attacking the larger cities in India, and we have identified 750 such cities to lead this expansion. It is beginning to show very good results. But it is not something that will play out in 1 quarter or 2. It's a more long-term strategy. Along with that, matching aggressiveness on the ground in terms of trade discounts, bolstering up your part of your sales team that engages with painters and painting contractors to generate secondary demand from your paint dealers. All of those things are items on which we continue to be aggressive and will continue to be more aggressive in the coming quarters.
All right, talking about aggression, sir, what about ad spends? Where will they stabilize as a percentage of sales?
So again, we have said in the past that our ad spends will go up in absolute terms by maybe 5 to 10% on an annual basis. But since the top line is expected to grow at a much faster pace, therefore ad spends as a percentage of top line will decline by maybe 1.25 to 1.5 percentage points year on year for the next 2-3 years. Beyond 2-3 years, what do we do with that ad spends? Do we again start increasing it more aggressively or not? Is something a little far away to predict. But for the next 2 or 3 years, you can expect an ad spend to decline as a percentage, not in absolute terms, as a percentage of top line by about 1.5 percentage point every year.
All right, so what is the growth that you can guide for going forward? How much will the growth of Indigo Paints be versus, say, the industry?
In this quarter, you can see our EBITDA has expanded by 45%, 44, 45% this quarter. PBT has expanded by 53%. PAT, there is an expansion of 173%, but even if you discount that one-time reversal of a tax provision, PAT has also grown by 53%. So I think that that is by far the highest as far as the industry is concerned. So we do hope to grow aggressively, not only on the top line, but even more aggressively on the bottom line as we go forward.
Mr. Jalan, it's a pleasure. Thank you very much for your time and good speaking with you. So stock's down about 4%. It's pulling back some of the gains that we saw on the name in a trade yesterday. The market is, more or less flat. Was up 50 points. We're down about 13 points now. So it's in the red. Market breadth is also evened out. It was overwhelmingly in the green, and now it's evened out. 1,210 stocks are higher, and you got about 800 stocks which are lower. So the gap has narrowed a little bit, not in a good way. Mahindra Life Spaces is the next company that we are speaking with. The business update looks weak sequentially, owing to the high base, but it's a decent performance versus last year. Remember, the company did warn and was conservative in Q1. Where it was a record showing that, the run rate perhaps is a little unsustainable. But bookings have actually halved. So let's understand what is the future looking like